Hello everyone, daily commodity calls by the Vela Academy. So yesterday gold tapped exactly at 4268.70, our hidden support ceiling and reverse super duper clean to the upper side. That's not luck, that's the structure working, and right now price is back at 4315 level and we have two very clear scenarios playing out. I'm going to show you both exactly where to watch and what to do. Let's go. First, let's talk about what's driving this. The Israel-Iran war that started on the 28th of February completely reshaped the macro landscape. Iran's supreme leader was killed. The Strait of Hormuz, which carries 25% of the world's oil supply, was effectively shut down. A ceasefire is technically in place, but it's fragile and the strait remains largely closed. Oil shock means inflation stays hot. Hot inflation means the Fed can't cut. In fact, markets are now pricing a 73% chance of a rate hike before year end. And that is the environment gold is trading in. War premium being stripped out and rate hike premium being baked in. That's the tug of war, and that's why gold has dropped over 9% from its high, but structurally, the long-term story is not broken. Now, Elliott Wave on the other hand has given us the full roadmap. We have completed 5 wave impulse up to the highs above 4,900. Since then, we have been in a corrective wave 2 ABC pattern. A down, B bounce, and now we are in the C leg completing. The C leg is subdividing into 5 waves of its own, and right now we are finishing the final wave of wave 5 according to H4 counting. So, if we relate our technical together with our Elliott Wave counting, we can expect for the price to complete its leg somewhere within our support zone right here, or if the price extended, we can expect for the price to drop to either one of our rock-block zone to buy until we see a clearer structure or a clearer confirmation that the price would then reverse all the way to the upper side. The key message from the wave count: do not sell down here. We look and wait for the wave 2 low to form and then wave 3 up begins, which historically is the strongest longest wave. That's the trade we are positioning for. Now on the chart, this is where it gets more precise. If you guys take a look on yesterday's drop, the price literally dropped down and tapped onto our ceiling of our hidden weekly and daily demand zone at 4268.70. It then gave us a very clean entry from the bottom all the way to the top for about 592 pips in total. That level is not random. It is hidden as an R from the weekly and daily structure that I've been tracking. Price respected it perfectly, and right now we are back at 4330 level. Here are the two zones I'm watching for re-entry longs. Scenario number 1 is where we can expect for the price to reject the current rock-block zone to sell and drop down to our M15 demand zone or to our medium risk or low risk reversal zones. Scenario number 2 is where we can expect for the price to keep on climbing and break through all of our rock-block zone to sell and turn it into RBS to hit our last supply zone on H1 time frame. Alright guys, so these are the two scenarios. We can expect for the price to either climb all the way up to our nearest supply, or we can expect for the price to drop down, give us a little bit of a confirmation for the price to continue bullish at least to our targeted level on H1 time frame. So right after the price tap onto our H1 time frame, this is where we are going to look for confirmation. Either we're going to sell off all the way down to continue H4 wave counting, or we might be able to see a sweet reversal all the way up at least to our daily structure right here. Alright guys, so if you guys take a look on the setup right now, from the current price all the way to the nearest TP that we are targeting on the daily, we can expect for the price to run somewhere around 1200 all the way to 1000 pips in total guys. Alright guys, so that would be the setup for the day or for the week maybe. So we'll see how it goes. Update you on the second one. Take care, trade safe. Assalamualaikum.